Alrighty, folks, I want to talk about something, okay? Everybody's selling everything. Let's just be honest. You look at any stock, just about in the entire stock market, basically since 2021, they've been sold off insanely heavy, right? Anywhere between 20%, 90%. Crypto, same exact thing. People are selling everything for the past 8 to 12 months essentially. Now, I want to explain in this video two very good things about this because no one talks about this. Everybody only talks about the devastation, how much worse it's going to, that's what everybody's caught up into. How much worse is it going to get? The devastation, the pain, things like that. No one even ever looks at there's two very core, extremely important, extremely good things that are coming from this, in my opinion. If we back it up from, by the way, I hope you guys appreciate this video. I hope you enjoy it. If we go back from October 2020 through October 2021, right? It was all about meme stocks to the moon, meme coins to the moon. Margin debt peaked at near $1 trillion in margin debt just on stocks. We had obviously crypto exchanges doing 20-to-1 leverage on cryptos where you could lever up 20-to-1. Then there was some stories about people potentially leveraging insane amounts from one exchange and then leveraging to another. That's a disaster, okay? We had all these stable coins, they called them, that were supposed to have this great return where you're supposed to make 10%, 20%, all this stuff, right? And we had an overall sentiment Buffett's washed, right? And that whole old school investment, thesis of focusing on companies for the long term and, all that stuff, people were that's washed, right? It's a different time now. This is a different time, right? And that's what we had going on, okay? And, to illustrate kind of the points of this, if we think back to the AMC craze that it was, right? I remember this gentleman was super popular. No one ever heard of him, and all of a sudden he was on the AMC bandwagon, and he pulled in 17 million views. Okay, now to give you some reference of how insane 17 million views are, I think everybody knows I'm extremely popular, okay, on the internet. I think everybody knows that, right? And I get a lot of views. I've never even gotten remotely close to 17 million views. My next door neighbor is probably the most popular finance-related YouTuber in the world, and I don't think he's ever even gotten close to 17 million views in a month, even with his great, videos and the editing and the thought process that goes into it, and how many subs he has. I don't think he's ever gotten that sort of view count before in a month. It's ridiculous. There's only one YouTuber I can think of that's ever done more views than that in a month in the finance space, and that was Kevin. He I think at the peak did almost 40 million in 1 month, which is a number that will probably never ever be topped ever in YouTube finance history, right? But this just shows you how insane things got that, somebody just came out of nowhere and the next thing you know, they did 17 million views in a month, right? Guys like this came out of nowhere, and all of a sudden we're doing 7.5 million views in a month. That's just an extraordinary number. By the way, how do you have negative 1.2 million views? The only way you get that is if you delete massive amounts of videos, okay? Look at Google Trends. As we always say, Google Trends is our friend. Look at Dogecoin. Dogecoin for Google Trends went off the charts during that time period, right? And in January and a little later into 2021. And now look at it, just there's no interest at all. But in that phase we were going through, everybody cared about. Look at this Shiba. Remember this Shiba? Oh my gosh, man, everybody went crazy for the Shiba for a little bit. And look at the Google Trends on that, went absolutely nuts. Now no one cares again. It's not the hot thing, right? Unfortunately, one thing that has gone up massively is a term like margin call, right? That's obviously much more popular now than it ever was. I remember this guy wanted to fight me. Literally, so this is a hilarious story. I don't think a lot of you guys even know this, okay? Hilarious story. This is Millennial Money back when Kevin's channel was peak back then, and he was getting 1 million plus views a day. And this is when Millennial Money was getting 200,000, 300,000 views. And it was during the AMC craze. And the guys were asking me, what's the probability AMC stock goes over 100? And I said, I think there's less than a 2% probability that was to happen. And because I said that, this guy challenged me to a fight, literally a fight. And was so mad, and it was one of his most viewed videos ever. Unfortunately, once again, they deleted it with a whole bunch of other videos. That's why they got negative 1.5 million views. But they used my name. It was funny. I woke up the next day, and my comment section was just filled with hate. oh my gosh, people were going off on me and how much of an idiot I am and I'm clueless and AMC's going to 1,000 and do your research and you don't know anything and blah, blah, blah. And I found that video and I'm like, oh my gosh, I never forgot. I'm like 50,000 or 60,000 views or whatever by just using my name. And, yeah, you use my name, you're going to get a lot of views. Like, there's just bottom line, that's just the way it is. And, just what a stupid time period. Like, what a stupid time period we were in back then. When if you even said there was something wasn't going to work out, people wanted to fight you over it. Like, gosh, man, what a time period. And unfortunately, we're going to go through one of those time periods again someday. It's not going to be for quite some time. That's the good news. But we will go through one of those time periods again, okay? Two core things are extremely good about this, okay? One is this is very healthy for the entire financial system, okay? I can tell you what's not healthy. What's not healthy is margin debt going to insane levels. What is not healthy is leveraging out 20 to 1 on cryptos. What is not healthy is people putting their life savings in some coin that they don't even know if it's backed by anything, some algorithmic stable coin, things like that, right? Those things are not healthy, right? And a belief that, any sort of older investment philosophy is like a washed up strategy and it doesn't work and things like that, right? None of that's healthy at all. And so, if we go back and illustrate this in the last financial crisis we had, right? Think about the housing market. Was that healthy, what was going on in the housing market? Because for years, what we had is a situation in the housing market, right? Where you could just say, oh yeah, I make $100K a year, and like no one would fact check you or anything like that, and you could get approved for this loan. And then we had like people buying multiple properties with not even like the money to buy those multiple properties. They just got the loans, and the reason people were doing that was because prices were going up so fast. People were like, why not just leverage out, get the next loan, Real estate's never going to go down. We're only going up. And unfortunately, that went on for such an extended period of time that when real estate came down, two core things happen, right? One is properties got a lot cheaper, which is good news if you were in the market for a property, right? Because everything crashed, it was a lot more affordable to buy a home after that crash, right? And the second thing is obviously is a deleveraging of the system, which got us in a more healthy market long term, right? What was going on in the real estate market was not healthy for many, many years. And so we got to get to at least a level that was healthy in the stock market, right? And a lot of people learned a valuable lesson in that situation about speculating on real estate. And people still remember that nowadays. And I think there is still some level of speculation that's happened in the real estate market over the past year, but it pales in comparison to that old time period we went through, essentially. The folks that are flipping houses and things like that now, it's to such a smaller extent than we saw in that previous bubble situation, right? And so, you get those sorts of speculation, but it's not even close to what we had back then when people would just lie and have 6 homes and no one renting them, and it's just ridiculous, right? Second thing is that's very important and is actually a great thing is in a crash, everything gets cheaper. Everything. So if you're looking to acquire assets, they become massively cheaper during a crash scenario. And so by going through one of these cycles, it brings down everything, right? I mean, if I just pulled up my big tech watch list, every single stock I'm showing you right there is massively cheaper today than it was going into 2022. And it's massively cheaper than where it was in 2021. Every single one of those stocks is down anywhere from 20% to 80% from where it was in 2021, okay? Every single one of those. So the fact is now you're able to acquire stocks for massively cheaper than it used to be. Tesla used to have to, if you want to buy Tesla shares, it used to be $1,200 to buy a Tesla share, right? At one point, if you want to buy a PayPal share, it was $300. At one point, if you want to buy AMD, it was like, $150. At one time, Shopify was, we want to talk about Shopify, right? Apple used to be much more expensive than it is today. Amazon used to be much more expensive than it was today. Meta used to be much more expensive than it is today. And so these are things that no one talks about. This is healthy for the system, these massive sell-offs. It gets rid of all this pumped out money. It gets rid of this ridiculous thought process of like things only go up to the moon. And at the end of the day, it makes things a lot cheaper for you to take advantage of and be able to buy things at much discounted prices, no different than in the great financial crisis. After that, was going on, you were able to buy a home for much cheaper and a much more realistic price in 2010 and 2011 than you were in 2007 and 2006. And overall, that makes us for a healthier system. And then you can actually have the next bull run. And unfortunately, when you're at the tail end of that bull run, that's when you get the euphoria in there. That's when you get the crazy speculation in there. And it's a process that just has to be worked through. And it is what it is. But don't fear it. It actually makes a much healthier market, because those markets, when you have pure speculation going on out there, massive amounts of leverage, just scary markets, because you know it's just a ticking time bomb. It's just like counting the seconds until it ends, man. Anyways, guys, much love as always. I appreciate you joining me. And spread this message out there. Peace.